video where we are learning about price patterns. Let's quickly jump into the next price pattern, which is known as the rounding top pattern. So if you can see here, a rounding top pattern occurs when the price is slowly moving upwards and then it starts coming down in a fashion that it starts looking like a semicircle, right? And when it breaks this line, as in the neckline, then you sell it here. Your stop loss can be around 4 to 5% of your capital. Your target can be as many points as the points between the neckline and the topmost pattern of your rounding top pattern. The next chart pattern is the opposite of rounding top pattern, called the rounding bottom pattern. Here the price starts going down slowly and then it starts coming upwards such that it forms a semicircle, and then it breaks the semicircle, or you can say breaks the neckline. Then you should buy here or enter the trade. Your stop loss again should be anywhere between 4 to 5% of your capital, and your target would be as many points as between the neckline and the bottom of the rounding bottom pattern. We will look into an example. This is the chart of JK paper and we are looking into an example of rounding bottom pattern. This is a monthly chart. So if it's a monthly chart, you know that the patterns are supposed to be very strong. So if you can see here, there is a very clear rounding bottom here, and it broke the neckline at this point. And you can see the price going high. It broke the neckline at around 70s and the price went up till 180s. So that was rounding bottom pattern. We will look into more patterns in the upcoming videos. Till then, take care. Bye. Cheers.